All right, more fringe benefits. We are seeing them. Now, there will be some items here that do change year to year. Those amounts, thresholds, all of that stuff. And those will be in our resources for you to memorize. So just making a note of that, we'll point out as we go through. Certain fringe benefits provided by employers to their employees are excluded from an employee's gross income, making them tax free. Now, here are ones that are not taxed. We talked about some that are taxed, and generally speaking, they are taxed unless they're included, specifically mentioned in our lists that they're not. First off, we're going to have accident, medical, and health insurance. If an employer pays for an employee's accident, medical, or health insurance premiums, the payments are not considered taxable income to the employee. A lot of these things, I'll just kind of talk about this. Generally speaking, if the IRS is saying you don't have to pay taxes on it, it's not included. Why? Well, what's going on there? Generally, it's because they're trying to help you out. A great example, this is something we'll see later on in the course, but if a company takes out a life insurance policy on their CEO, well, why do they do that? If the CEO passes away suddenly, that's a big deal for the company. They probably have bigger issues to worry about. So the IRS says you don't have to pay tax on that money you receive from the life insurance on your CEO because you probably have bigger things to worry about than paying taxes on that money. And you probably need that money to kind of hire people quickly and get your operations going again. So that's a general idea as to why certain of these things are excluded. It's the IRS saying, all right, if you receive workers' comp because you were injured, you probably have better things to worry about than paying taxes on this workers' comp money. You should probably use that to get better. Just anything we see, generally speaking, if it's not taxed, there's a reason for it. It's the IRS trying to say, hey, here's, I know we taxed you a lot, but here's a benefit you can take. De minimis fringe benefits, so benefits that are so small and infrequent that accounting for them would be impractical. So occasional personal use of office equipment, coffee and snacks. That would be crazy if you got taxed on the coffee and snacks provided in the office. Small gifts for employees, stuff like that. You get a $25 gift card from your employer. Let's not worry about that. Meals and lodging. So employer provided meals and lodging may be excluded from an employee's income if they're provided on the employer's premises and for the convenience of the employer. Very interesting point here. So I remember my good old times in public accounting. Yeah, if you worked over 10 hours, you got to charge a certain amount and get dinner. I mean, hey, it was well worth it. If you worked that much, and generally it was a lot, you get a free dinner. Now, technically, yes, you had to have eaten that, ordered it on premises or brought it back on premises, eaten it on premises. And I like to also, what's the flip side of that? And this is something, we likely haven't gotten to if you're going in order, but for businesses, meals are deductible 100% if they are for the employee, if they're for your company. If you're taking a client out to lunch or something, that's only 50% deductible. So this is important here because that's the flip side of it, right? Why is it not including gross income? Is because if it follows that 100% rule, it's not includable in gross income. However, if it breaks those rules, then yeah, it would be includable. So that's just something to know there. And especially a lot of you in the accounting world, you're probably familiar with this situation as well, ordering meals if you work over a certain amount of hours. Now, employer payment of employee education expenses, this is up to $5,250 of employer paid education expenses can be included from an employee's income each year. So let's say, thankfully, your employer gives you $20,000 towards your tuition reimbursement or education expenses. You would only get to exclude up to this amount per year on that. So maybe you say to your employer, hey, only give me $5,000 a year so I can exclude that, because if they give you $20,000 in 1 year, you'd have to report anything over the $5,250 as income. Qualified tuition reduction. Undergraduate tuition reductions are included from employees' income. I said excluded, but I think it sounded as included. For graduate students, tuition reductions are excluded if they're engaged in teaching or research activities, and if the tuition reduction is in addition to their pay for teaching or research. Much more dealing with grad students there. Qualified employee discounts, so any merchandise discounts are excluded from income. You work for Starbucks, maybe you get discounts on coffee, or you work for Lululemon, maybe you get discounts on clothes, or whatever it may be, limited to the employer's gross profit percentage. Service discounts are also excluded, limited to 20% of the fair market value of their services. If you're a server and you get free drinks, free food, stuff like that, that's kind of what we're dealing with. Employer-provided parking, up to a certain amount per month of employer-provided parking is excluded from an employee's income. That is an ever-changing amount. As such, when we say a certain amount per month or an annually changing amount, that means it's going to be included in the resources because it does change each year. Also, transit passes, for those of you in my wonderful city of New York, up to a certain amount per month. You're probably not driving a car. You're probably taking the train in, unless you're a big shot partner at a firm. You're able to take your nice fancy car in and get the partner parking. A certain amount per month is excluded from the employee's income. Qualified pension, profit sharing, and stock bonus plans. Now, payment made by an employer into these plans are not considered income at the time of contribution. However, the benefits are taxable when distributed. So let's say you've got an employer match for your 401k, or you've got an HSA account and your employer puts a portion in there. That's what this is referring to. Payments made by the employer are not income. However, the benefits of those upon distribution will be taxable. Flexible spending arrangements, FSA accounts, pre-tax deposits made through salary reduction can be used to pay for qualified healthcare or dependent care costs. Employees can contribute up to a certain amount per year. That does change every year. Any unused funds may be forfeited if not used within 2.5 months after the year end, unless the employer elects to carry forward up to $500 into the following year. This is kind of dealing with, it's kind of like HSA, FSA. That's what we're dealing with here. If you're familiar with those in your benefits. Fringe benefits examples. Let's run through it. Now, this is dealing with our life insurance example we talked about, but we're actually seeing it come into play. Smith works for XYZ Corporation and earns a salary of $80,000. Smith also receives, as a fringe benefit, group term life insurance at 3 times Smith's salary. The annual IRS established uniform cost of insurance is $2.76 per $1,000. Now, if you see a question like this is how we're going to tackle it. Instead of just talking about this in words, I like to use examples. So if you see something like this is how we'd approach it. Now, in order to calculate the amount that Smith must include in gross income, first, we have to determine the total group term life insurance coverage. Now, what is this group term life insurance coverage? Because the employer is probably taking out insurance on a bunch of people. So it's not just you, it's a group. We've got $80,000 times 3. That's going to give us $240,000 because what is that? Well, 3 times Smith's salary. The tax exempt threshold is $50,000. So what we're saying here, again, is that you've got $240,000 of coverage and we're reducing it by that $50,000. That's the amount that we mentioned prior. Now, what is the cost we have to include? $190,000, the taxable cost based on the IRS. And this is a number created by the IRS. It'll be provided for you. I think it pretty much has stayed $276, but the question will provide it for you. What are we going to do here? We're going to say $190,000 divided by $1,000. That's going to give us the amount times 2.76. That gives us an amount of $524.40. Now, finally, add the taxable cost of the group term life insurance to Smith's salary. So we've got $80,000 plus $524. This is the total amount that we must include in gross income. I mean, we kind of knew already that the salary would be included in gross income, but also this is the amount that Smith would have to include over that $50,000. So that's how this works. If you're worried, maybe you weren't worried, but not that you should be worried. It's just a question you might see on the exam. So again, important points: 3 times Smith's salary. The uniform cost of insurance, this is how we calculate it. Make sure you're familiar with how this all works. Now, fringe benefits are non-wage compensations. Just make sure it's a term you may not have heard before, so just get that definition down. It'll help you throughout the exam. Provided to employees in addition to their normal wages or salaries. Now, while many fringe benefits are tax exempt, some, like this excess of group term life insurance coverage over $50,000, are going to be considered taxable income by the IRS. Now, in this example, the employee receives group term life insurance that exceeds the tax exempt threshold, and the additional amount of coverage is subject to taxation based on the IRS established uniform cost of insurance. There we go. Good. Hope you enjoyed that example. We got many more on the way for you. Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit CPA.Examprep.ai and let's achieve your exam success together.